Aren't you the guy who made it expensive to get HIV? Yes, I am. Let's look at SYM. That one's been that one's down a lot today. I guess they don't have accountants or something. I don't know. SYM. This was a weird company when I looked at it. They make like wholesaler or like retailer software. Okay, so it's 23 bucks. It was 33 bucks or 36 bucks yesterday. So a little bit of a sale. But it was 17 when I looked at it. So I don't know that... Some people think that gravity applies to the stock market. It doesn't really work that way. Yeah, so we talked about it basically at the bottom. And it basically doubled. And now it's back down. Oh wow, they had a huge beat. And now they're basically saying the beat was fake. And next quarter's beat, or next quarter's guidance is going to be, looks like 15 million lower. And EBITDA will be 15 million lower. This is tricky. It's never good to have an accounting crisis. It's kind of like the worst thing that can happen to a business. But at the same time, if you feel like gambling, it could be along. Certainly feels like supply and demand. Supply exhausted demand at around noon. It's been low volume since then. I don't know, maybe it's worth a little bet. We'll see how it goes. I'll keep an eye on it. Okay, let's do MicroStrategy. We haven't done that one yet. I should tweet that I'm doing MicroStrategy. That'd be kind of funny. But yeah, it's a good question. How do you value MicroStrategy is definitely a good question. No, I'm still short Sava. I shorted a little more today, actually, when it was up around 4. I also want to talk to some of my convert friends and see what they think. Because this whole thing is fueled by convertibles, right? All right, I also want to know what the difference between their Class A and Class B shares are. But I assume that they're both economic shares. So this is a 79 billion market value. Do I have that right? Chat. Digital assets. Okay, so that counts to me as cash. But we'll do like a, I don't know, Bitcoin section maybe, so we can actually just calculate that price more easily. Okay, so 4.2 in debt. I got 79 billion. Oh, are you guys converting? Is there some weird thing you're doing? Well, they're using debt to buy the Bitcoin, which is fine. That's their kind of game plan. Okay, so here's the number of Bitcoin held. So we can kind of use that to, just give me a second. We can use that to estimate the present value every second of it. So 252,000 Bitcoin. Do I have this right? So they have $23 billion worth of Bitcoin. I think I have this right. Yeah, 23 billion worth. But they have it on the books at, I guess, carrying costs, so it's 7. I'll look at the news. Relax, I know. I'm just looking at the 10Q. Believe it or not, I know how to analyze the stock. I know, it's crazy. Okay, so real cash is 46,343, 1,862, 4,211 debt. So the enterprise value is 75 billion. You're paying $75 billion more than the value of MicroStrategy. Let's look at the 8K. Okay, so there's 2029 zeros, 55% premium. And this is 1119. And this is 3 billion. Okay, so there's another 5 million shares sold. And that raised 2.46. Okay, so let's see, 2.46 and 3, or 2970 minus 5,400. Okay, that makes sense. And now they have 386,700. So you're paying $62 billion extra for MicroStrategy. What is the BTC yield? We do have to add the older converts to the extent they convert. There's a method for this called the Treasury method. Okay, so you're paying $81 billion to buy... Okay, so it looks like 81 billion to buy 37 billion of Bitcoin. So another way to put it, I guess, would be the value of the Bitcoin per share in MicroStrategy is $176. So it should be trading at $176. I'm trying to think of a creative way to think about this that makes it make sense. Because right now I'm having a hard time having it make sense, but I'm trying to be creative. So even if you assume his cost of capital is 0, okay? So let's assume this is a different world. This is Saylor world, okay? And we're going to imagine in Saylor world, he can sell shares. Okay, this is interesting. He can sell all the shares he wants of MicroStrategy at a 2x price. Let's assume this is a crazy Saylor world, okay? So his cost of capital is lower than 0. That's not sustainable, obviously. Because let's say you're a lender, you're convertible bond arbitrager. I know guys that run convert funds. So the way convert funds work, in case anybody doesn't know, it's a little more complicated than meets the eye. In essence, you are buying this convertible, and I've sold convertible bonds with Barclays. They did a great job, by the way. If you need a good bank to run a convertible offering, they're good. So your convertible notes have some kind of coupon, and it's usually not 0, but it's very, very low. And so this allows like smaller companies to sell debt, but it's not really debt. It's got debt character and equity character. So it's somewhere between debt and equity, depending on a few different things. So when you have a really low coupon and a low conversion premium, let's say you have a $100 stock, okay, and you're the CEO of this company, and you're sick of and this is, let me just show you kind of how my company worked. And you have 20 million shares outstanding. So you have a $2 billion company, and you need cash for something. But you're sick of selling shares. I could go and sell 2 million more shares of my stock with Goldman Sachs or somebody like that and raise 200 million and put that on my balance sheet, right? Let's say my cash is running low. I have 50 million, and I want to raise 200 million. So there's a few options. I can sell 2 million shares of stock, but now my shares outstanding goes from 20 to 22. And I don't like that dilution. My shareholders don't like it. My EPS might go down. So instead, I could borrow money. So if I borrow money and I'm sort of this like struggling mid-sized company, no bank's going to really give me debt unless I have better kind of earnings profile and stuff like that. So convert is kind of in between. Otherwise, if I were him, I'd just borrow debt or do an asset-backed loan. But in any event, so the convert has like a mix of, oh yeah, my face is way too big. The convert has a mix of equity and debt. So the convert is senior. So it is a serious claim on the assets of the company, typically. So if you don't pay the convert coupon, you go bankrupt. So that's a really important thing to keep in mind. Convertible notes are debt. You don't pay, equity is worthless. Many companies have gone bankrupt using convertible debt. So in any event, so again, in the picture of a small company, like at the time my pharmaceutical company, we sold, I want to say around 100 million of converts. And the nice thing is the coupon's a lot less than debt you could raise. So if you raise the debt yourself, it would be like 7% or 11% or something like that. So with converts, you can get this really low coupon, which is really nice. Now, the conversion price is interesting. So I have a $100 stock here. We can make the conversion price $130. So why would somebody buy this? Well, if you buy this as an institutional holder, let's say we do this $100 million offering, and we pick a bank that we like with Goldman Sachs. Goldman Sachs is gonna make like 3 million on this. So I receive 97 million. The company does. So my cash would go up from 50 to 147. And the debt, this is debt though. So I have 100 million in debt now. So why would a hedge fund or someone like that own this? Well, it's very interesting. So from the hedge fund's perspective, so I'm sort of done here, right? I'm happy. I got my capital. Every quarter I have to pay this coupon, or every half year. And it's only $2 million a year of interest, when normally a bank loan would be like 7% or 10%. So the hedge fund that buys this convert has to think about this pretty carefully. So the hedge fund is earning the 2% coupon per year, right? So they're getting 2%, and they're getting part of that 2 million in interest. But that's not
very attractive in almost any circumstance. And the reason that they're doing this is really for the conversion feature. But the conversion feature, is that really valuable? Because the stock's at 100 and the convert trades at, the convert price is 130. So if the stock went to 140, this would be a very valuable bond to have, because now you can convert it and earn a serious return. So you have this optionality. You're protected on the downside because you're senior secured. So if the company doesn't pay you, it goes bankrupt. But at the same time, if the company's stock rises dramatically, and you have like a 5-year, or 3-year conversion option. So let's say the stock goes to 200, you can just forget that this is debt and convert the stock. Now, another thing you could do, and this is what hedge funds typically do, is they'll sort of short the stock. And so what they'll do, and this is called convertible arbitrage. So they'll buy the convert and short the stock. And this is kind of probably what's going on with MicroStrategy to some extent. And there's different ways and reasons you would want to do this. So lots of different ways to sort of decide how to hedge. At significantly higher than the conversion price, most hedge funds will hedge the entire thing. But selling short allows you to have this sort of win-win. So in a bankruptcy, the convert is probably worth something because it's senior secured. But your short is going to make a lot of money if the company goes bankrupt. So you're sort of trying to mix shorting the stock with owning the senior secured. So it's a very interesting dynamic. And if you play around with the spreadsheet, you'll sort of get a sense for, okay, why and how would people do this? So as I mentioned, MicroStrategy is an $81 billion company with $36 billion of Bitcoin, really 32 after you take out the debt. So why are we paying, we should really subtract this as well. Why would we pay $390 for $156, right? That is literally the deal you're making. Well, companies aren't static, right? They're dynamic and fluid things. They tend to change. And so in Saylor world, imagine we live in a world where Michael Saylor can issue stock at 100% premium with no interest. What would happen then, and how much could he issue? So this is the pre-Saylor. This is the real world, and now we're going to take a trip into Saylor world and see what happens. So in Saylor world, he's going to issue debt. So we're going to put the debt here, and we're going to say we're going to make this $50 billion in debt. Okay, really, really crazy amount. And he's going to buy $50 billion of Bitcoin. Well, usually when you lend the money, you also short the stock. So there's a weird parity there. Now with 0% coupon, I'm not sure shorting the stock makes much sense. So you're trying to find a delta that you're willing to short the stock at. Anyway, let's keep going. Okay, so there's $50 billion raised, and he's willing to buy $50 billion of Bitcoin. So how much Bitcoin is that exactly? Okay, so that's 500,000 Bitcoin. So this is a pretend exercise where he raises 50 billion in debt and buys 50 billion in Bitcoin. Okay, so let's say the share price stays the same. Let's do the conversion in a second. In this scenario, let's say Bitcoin's price stays the same. In this scenario, he's got $86 billion of Bitcoin, but $54 billion in debt because he paid for the debt. And so the enterprise value of the company actually does not change. Now, the secret sauce here is, what about the converts? What about if this debt converts to equity? So the $50 billion in converts, how would they convert? Well, let's think this through. In this world, we're doing this at a 100% premium. So it's really wacky kind of premium. $780. The bondholders can convert $50 billion in our pretend world here. And you'll see why I'm doing this exercise in a second. And that would be that many shares, 64 million more shares. So we can remove that from here, the debt, because it's no longer debt, and it just converted to shares. So if we do that, I'm just going to do it manually, plus 64. Okay, so the market cap rises. The holdings all stay the same. There's no more debt, though. And the enterprise value of this, interestingly, is better, but it's not that much better, and it doesn't make it a long. So this means that if Saylor is able to sell a zero coupon convert of $50 billion at 100% premium, not at a 50% premium, which is what he has access to now, but 100% premium, you still have an overvalued, you would still have an overvalued company. The shares outstanding would go up. I guess at 780, you would again have this massive premium. So the stock, even at 390, would still be, sort of overvalued. So that they would, basically the share price is implying that he's either going to successfully sell $50 billion of converts. Keep in mind, he just did 3. So he'd have to sell $50 billion of converts at double the stock price for this to kind of make sense. It not as a good investment, but kind of not lose your shirt. So I'm sure he'll keep selling convertibles, but can he sell 50 billion at that premium? Right now he's selling it like a 50% premium. So let's do the math if he does it at a 50% premium, which is a lot more dilutive, needless to say. Okay, and you basically would not get it to be, obviously it's less of a long, the less of a premium he can sell, but it's a fairly ugly situation because you're still overvalued by, I don't know, like 30%. Okay, so the really interesting thing to do here, the dumb thing is to say, okay, why am I buying MicroStrategy for $156 worth of Bitcoin for $390? Anybody can do that math. But the question is, what is the implied cost of capital for MicroStrategy such that the price makes sense? And at this price, even a $50 billion convertible would not, at 50% higher price, would not make MicroStrategy long. The only reason you would buy MicroStrategy is because he's selling converts for double his stock price, 50% higher than his stock price. And to the extent Wall Street keeps believing this, he has an advantage over you. He is paying for Bitcoin with something that's 50% higher than the current price of the stock. But there's a few issues with this, which is there's only so much demand for convertibles. The more convertibles you sell, the less demand there is for them. So here, he sold $3 billion converts, and even if he sold 50 billion more, I don't think that he would have enough Bitcoin for it to be long. At some point, he actually has too much Bitcoin, and it kind of becomes an overhang, right? Does he want to own 10% of all Bitcoin? That seems like ill-advised. So anyway, let's pretend he does 100 billion of converts. Now, this is the amount of debt like an Apple would have, or maybe even more. So this is like, it reminds me of AT&T, Verizon, like the biggest debt issuers in the world have around this much debt issued. So like you're really straining maybe the capital markets and the convert market. And by the way, that's in traditional debt. So converts is a smaller section of debt and finance where the biggest convert funds just can't handle all this paper. So like I'm not sure these banks that run convert desks or convert funds want to own this much MicroStrategy. But let's assume he sells a $100 billion piece of paper, whether in bulk or in multiple tranches, and it's a 50% conversion premium. Okay, so this is getting a little
a little stupid, but let's try it and see what happens. So in this case, he gets to buy a million Bitcoin, which is a remarkable amount. And only in this scenario is MicroStrategy even a break even. So he would, okay, it would be worth $455. So it's a little undervalued if you assume 100 billion. It's really overvalued if they sell 50 billion. So something like 75 billion, I guess. Oh, I didn't even add the new shares. Never mind, hold on. A little math error here. Forgot to add the new shares. Okay, it's still overvalued okay, it's fairly valued if they sell 100 billion. So they need to sell $100 billion of converts and buy Bitcoin at this price with that money for the stock to be worth the current share price. Now you have to ask yourself, I sometimes call this like a reverse DCF or an imputation. So you can compute a fair value, or you can impute it. And I think sometimes the imputation is a lot more intelligent than anything else. We don't know what the future price of Bitcoin will be. The future price of Bitcoin could go down. I hate to tell you guys that. I like Bitcoin, but if Bitcoin's price goes to 50,000, which it very well may, you've got a bigger problem on your hands. If it goes to 125,000 or 200,000, then sure, you definitely are in good shape. So you have a leveraged Bitcoin position, but let's just assume, this is the price. And you can, by the way, you can hedge this with Bitcoin, right? So it does matter. It's very easy to hedge this with Bitcoin. You can literally just hedge it and you will make money. If you short Bitcoin or long Bitcoin and short MicroStrategy, at the right ratio, you have to determine the right ratio, but it should be a perfect hedge. And if not, you can arbitrage it and make some money. But think about this point, which is at current prices, you would have to sell 100 billion converts and buy 1 million Bitcoin at this price for the shares to be break even. Now, another way to look at it is, back to the real world, is what if Bitcoin goes to 150,000 per Bitcoin? It's actually still overvalued. What is the price that gives you fair value? It's something like 200,000 per Bitcoin, which, could happen. It would be 220,000 BTC. So you can just long Bitcoin and short MicroStrategy. I mean, it seems pretty simple. I mean, I have no position really on whether or not Bitcoin will hit 220,000. It very well may. The bigger problem here is that the convertible bond market just isn't that interested in, I don't think, buying this paper forever. So it's funny, I don't even have to look at a balance sheet or an income statement. Well, I have to look at a balance sheet, but I don't have to look at an income statement or a cash flow statement for this. It's literally one asset, right? And, there's this sort of max pain theory in the market where, like, the market will take a path that causes the most pain. And I don't really believe in fate or anything, but, like, this guy also blew up in the dot-com bubble. It would be such a tragedy if Bitcoin went to like 10,000 and he was forced to sell it all. I would short it. I would short it and buy Bitcoin as a hedge. But you have to do it in the right ratio. It might be a 2x Bitcoin, 1x MicroStrategy. I don't know that it's an even trade, because you're sort of shorting a leveraged version of it. So you'd have to short one share of say $1,000 of MicroStrategy and be long $2,000 of Bitcoin. And you would have to delta hedge. And so you'd have to change that ratio as prices changed. But I think that's about right. Also, if you're just bearish on Bitcoin, MicroStrategy is a better way to short. A much, much better way to short. Yeah, so that's it. I think that's all I got on MicroStrategy for now. I'll have to sleep on it and think more about what it means, but basically the guy has a cost of capital advantage, right? You and I have to borrow money and pay an interest. He doesn't. And he can convert his debt into his stock, which is just pieces of paper that don't mean anything. And so he can kind of buy Bitcoin for free if Bitcoin goes up. Kind of one way to look at it. It sounds like he's hesitant to do what I'm describing, which is to leverage up and sell a lot of converts. And of course, I think Wall Street would be worried that, okay, the only collateral I have is Bitcoin, which may or may not be useful. If it drops, it's not so useful. So another way to think about this is, okay, if he's going to be patient, then one of two things have to happen for the stock to make sense. Either Bitcoin has to rise either gradually or all at once, doesn't matter really. Bitcoin has to rise quite a lot. Or and I mean, that's really it. If that doesn't happen, the news flow for MicroStrategy will slow down, basically, and he won't be able to announce any large new Bitcoin purchases, which is reflexive on the price of Bitcoin, right? So one of the reasons Bitcoin may be up is you have a guy out there bidding for billions of dollars of it. So there's a little tiny bit of reflexivity in there. So if Bitcoin stops going up, it may start going down or stop going up, the second derivative drops, I guess, because he can't announce more purchases. And if you're in this stock for investor psychology reasons, that's a bad thing if he can't buy more Bitcoin. But he needs Bitcoin to go up to buy more. I think there's a word for that. But regardless of that word, it's not a zero or anything. But if Bitcoin dropped at all, the fact that he's trading this big premium to Bitcoin would be really damaging. So let's say Bitcoin goes to 70,000. That's not a big deal if you own Bitcoin. You can wait it out 5-10 years if you had to. Lord knows people have done that before. Nobody's been used to a cycle of Bitcoin that's really negative for many, many, many years. Most people have waited out as a few years.